Hi everybody, good morning. This is lecture 1, week 2, ACT3132. Uh, okay, last week you have been introduced to the master budget. I think you have seen that a master budget is the most important and maybe the most comprehensive budget that a business should prepare. And then last week also you have seen that the process is the process to prepare the master budget is started with preparing the sales budget first. The company has to estimate the quantity of sales, how many unit of sales they think they want or they can sell in the next quarter or in the next month or in the next year. And then after that, after the sales budget is prepared, the business has to prepare the production budget, and after that the business has to prepare the direct material budget, direct labor budget, and overhead budget. So last week, this is where we stopped. We stopped at seeing how a business should prepare an overhead budget. So this is the last thing that we have covered last week. So see here, just to refresh your memory. Okay, this is last week you have seen how to prepare the sales budget, production budget, direct material budget, labor budget, and overhead budget. So this is where we stop. Now, the next step in the preparation of a master budget is preparing ending finished goods inventory budget. Okay, after a business has prepared the overhead budget, the business have to prepare ending finished goods inventory budget. So this is the format. The first thing that you have to show in this budget is see there in the slide, unit cost computation. So first thing, you show the direct material, and then you show the direct labor. So you have to calculate for this business product, how much is the direct material budgeted cost. In this example, the budgeted cost is for 1 unit of product. The budgeted direct material cost is 26 cents. Why 26 cents? Because the material used in the production of 1 unit product is 26 pounds, and the price for the material is 1 cent per pound. So the total direct material cost per unit is 26 cents. Am I right? Yeah, I think so. Okay, so the direct labor cost per unit of product is 12 cents. And then the variable overhead cost is also 12 cents per unit. And fixed overhead cost is 8 cents per unit. So total unit cost for the product produced by this sample business is 58 cents. So and then so the finished goods, which is the concrete block, the product produced by this business. So for 1 unit, the cost is 58 cents. For 100 unit, the cost is $58. Ending finished goods inventory budget. Okay, this is the calculation for the unit cost first, and then the next thing in this so this is ending finished goods inventory cost. Remember, the finished goods is 100 unit, and then the cost for the finished goods is $58. Okay, and then cost of goods sold budget. Okay, this is schedule or step number 7. After you have prepared the calculation for the ending finished goods inventory, the next thing in the step to prepare the master budget is preparing the cost of goods sold budget. Okay, cost of goods sold budget. So you have to remember this format. Cost of goods sold budget, you have to show, the first item that you have to show is direct material use. Okay, this number is coming from the direct material budget, which is in this lecture notes. We use the term schedule 3, the direct material budget. And then you can check the previous slide. And then the second thing that you have to show in the cost of goods sold budget is the direct labor use. This item is coming from schedule 4 or direct labor budget. And then the item number 3 that you have to show in this budget is overhead. It is coming from schedule 5, overhead budget. The number is 3,200. Okay, so direct material plus direct labor plus overhead, you will get a number, a total. The total is budgeted manufacturing cost. See here. Oops. Okay. Can I highlight something? Okay. So that is the total for the 3 costs, budgeted manufacturing cost. And then the next thing that you have to show after calculating the budgeted manufacturing cost is you have to show beginning finished goods. In this sample question, the beginning finished goods given in the sample question or sample scenario is 55. And then the goods available for sale is the budgeted manufacturing cost plus beginning finished goods. You will get the goods available for sale, and then less ending finished goods. Remember, you have calculated the ending finished goods in schedule 6, 58 cent times 100 units. So you will get the budgeted cost of goods sold, 9,277. Okay, next thing. Step number 8 in the preparation of master budget. The master budget. Okay, so in the next thing, or the step number 8 is the preparation of marketing expense budget. So when you want to prepare the marketing expense budget, the marketing expense most of the time depends on the quantity of sales. The more you sales, the more you have to spend on marketing. So when you prepare the marketing expense budget, you have to base the budget according to the sales budget, because the assumption is the more sales, the higher the marketing expense. So that's why when you see this marketing expense budget, the first item in the budget is you have to show the number or the quantity of sales. These numbers are coming from schedule 1, the sales budget. So see here, quarter 1 2,000, quarter 2 6,000, quarter 3 6,000, quarter 4 2,000. So total sales during the year is 16,000. So the unit used in this budget is in thousand, so 16 million. So quarter 1 2 million, quarter 2 6 million, quarter 3 6 million, quarter 4 2 million. Total for the year sales is 16 million units. Okay, so and then the second item that you have to show in the marketing expense budget is the variable marketing expense per unit. So the cost of marketing most of the time can be divided into two types: variable marketing cost and fixed marketing cost. So in this budget, the first thing that you have to show is the variable marketing expense first. So in this sample question, the number is 5 cent per unit of product. The variable marketing expense is 5 cent per unit of product. So 2 million, quarter 1 2 million times 5 cents. So total variable expense expected or budgeted is $100,000. Quarter 2 6 million unit production or sales, 6 million unit sales times 5 cent for every unit variable marketing expense. The total variable marketing expense is 300,000. Quarter 3 300,000, quarter 4 100,000. So the total variable marketing expense expected or budgeted is 800,000. So this is the first half of the marketing expense. Okay, this is the second half of the marketing expense. Okay, so the second half of the marketing expense, you have to show the fixed cost related to the marketing activities. First here it shows here salaries is $10, advertising, I think this is not $10, maybe 10,000. Okay, so in the previous slide, okay, the unit is okay $100,000, and then okay here okay, now the number here, the fixed marketing cost, the first one is salaries. The number here is 10, but in this budget the unit is in thousand, so 10,000. Salaries 10,000, advertising 10,000 per quarter, depreciation is 5,000 per quarter, travel is 3,000 per quarter. So every quarter the total fixed marketing expenses is 28,000 every quarter. Total for the year is 112,000. So total marketing expense for first quarter is 128,000. Okay, remember the total marketing expense is variable marketing expense plus fixed marketing expense. So for quarter 1, the variable marketing expense in the previous slide is 100,000. So and then fixed marketing expense is 28,000. So total is 128,000. For quarter 2, the total variable marketing expense is 300,000. The fixed marketing expense is 28,000. So the total marketing expense equal to 328,000. Quarter 3, the total is 328,000. Quarter 4, the total is 128,000. Total marketing expense, total marketing budgeted expense is equal to 912. Always remember, this is a budget. Budget means estimate. what the business has to pay in the next year or the next quarter. So the actual amount paid by the business is not necessarily equal to the budgeted amount. So always aware that. Okay, so what is the next thing? Okay, schedule number 9. Okay, schedule number 9 is research and development expenses budget. In some textbook there is no budget for research and development, but in the textbook that I refer to, there is a budget for research and development expenses. Okay, so let's see. Okay, see here the number used in this budget. So the first thing is you see there sales. The first quarter 18,000, second quarter 18,000, third quarter 18,000, fourth quarter 18,000. So total for the year is 27 to 72,000 sales. And then prototype design and development 10,000 every quarter. So total R&D expenses, budgeted R&D expenses equal to 28,000 every quarter. Total for the year is 112,000. So I think the number is given. If there is a question, then the question will have data about the amount of expected amount that the business has to pay related to the R&D. So you just use the number and you just remember the format, and then you can prepare this R&D expenses budget. Schedule number 10, admin expense budget. Let's see. Okay, admin expense budget. Just remember the format. You have to list all the costs, or you have to list all the admin expenses, and then amount related to the expense. In this sample budget, you can see that all costs are fixed costs. So it means that no matter how many sales a business make, the cost of admin expenses are same. For example, salaries, every quarter the amount to be paid for salaries are same, $25,000 every quarter. But the insurance is not same every quarter, because most of the time you pay insurance only once a year. So in this sample budget, the 15,000 insurance has to be paid in quarter 3. So it depends on the business. Sometimes in quarter 3, sometimes in quarter 1, sometimes in quarter 4. So if you have to prepare this budget, you have to be very careful. Check the data in the question, and then you can you use the number properly. In this sample budget, the depreciation expense for the admin purpose is 10,000 every quarter, and then travel expense is expected to be 2,000 every quarter. So you can see here the total for quarter 1 is $37,000. Quarter 2 $37,000. Quarter 3 $52,000. Quarter 4 $37,000. Total for the year is $163,000. Okay, the next thing in the master budget is to prepare the cost of goods sold budget. Cost of goods sold budget, see, remember the calculation for cost of goods sold? Cost of goods sold is like this. Sales minus beginning inventory plus purchases minus ending inventory. Cost of goods sold is beginning inventory plus purchases and then minus ending inventory. Okay, so that is the basic calculation for the cost of goods sold. So let's see cost of goods sold budget. Okay, so how to prepare that? So the first thing that you have to show is the the total sales from schedule 1. Expected or budgeted sales for the business for this accounting year. So for this accounting year shown in the budget, the total sales or revenue from the business expected to the related to the business is 12,000, and then that is coming from schedule 1 less cost of goods sold. That number is coming from schedule number 7. You have to check the previous slide. 9 million. So sales is 12 million. Cost of goods sold is 9,277,000. So the gross margin is equal to item 1 minus item 2 in the budget. So equal to 2,723,000. And then you have to less the marketing expense that you have calculated in or prepared in schedule 8. 912,000. R&D expense minus 112,000. Admin expenses from schedule number 10, 163,000. So the operating income, expected or budgeted operating income, is equal to 1,536,000. Okay, gross margin, and then you minus 3 expenses, you will get the operating income of 1,536,000. Less interest expense, so that is coming from schedule number 12. Supposed to prepare that first before you can prepare the schedule 11. So in this sample budget, the income before tax equal to 1,494,000, and then the less income tax. So this question in this sample budget, it is assumed that the business will have to pay 600,000 income tax. So the net income, budgeted net income is $894,000. Okay, let's see the next thing first. Then we conclude everything. Okay, this is schedule 11. Okay, this is the schedule 11. This is the thing. Okay, schedule 11, and then what else? Oh, the same thing. Okay, there is no schedule number 12. Even though in this schedule number 11, you can see there interest expense refer to schedule number 12. The amount is 42,000. But don't have to worry. If you have to do this cost of goods sold budget, the question will give you the interest expense amount. Okay, I want to conclude about this. So remember this, master budget is very important, very important. It is, I think, the uh, master budget is a comprehensive budget that a business should prepare and should use every year. If you have a business in the future, it is a very good practice to prepare a master budget and to use a master budget, because it covers most of the uh, important activities or operation of a business. So it is started with the budgeted of sales, and the last one is the last item in the master budget, I think, is related to this one, a budget that help you to see how much profit or net income that the business will make in the next accounting period. If you choose 1 year, then in the next accounting year. If you choose quarter, then in the next quarter. Okay, so that is very important. The second thing is to do a budget or to prepare budget. The most important thing is you have to remember the format for every budget. What is the format of production budget, sales budget, production budget, direct material budget, direct labor budget, overhead budget, and several more after that. So you have to memorize the format for every budget. The sample budget shown in this slide is very good, but later I think you have to check your textbook. And remember, I told you that this topic about budget is topic 9 in your textbook. You check there in the eConnect, you check the sample budget used in that textbook. See how the sample budget in that book. Also check the exercise. I think in eConnect there are many exercise questions or sample exam question maybe. So you check, or you check as many question as you can. Okay, I think you can see the answer of the question, so you check the questions, check the answer, so that you can get the skill, or you know how to prepare this master budget. Thank you very much. You have to write your matric number in the comment section so that I can take it as the attendance. Also, if you have any question, feel free to ask in the comment section or to ask me in the WhatsApp group. Okay, that's we stop here and continue in the next lecture.